Next, we're going to turn our attention to our market forecasts with two expert speakers. Joining us on stage for a look at the multifamily residential market is Brit Vitalius of Vitalius Real Estate Group, who always has an interesting and engaging presentation. Brit?
Thank you, Gary. Thanks, everyone, for having me back another year to talk about multifamilies. I think we're going to hear this year a lot of the same as last year, and as I was listening to Justin LaMontagne talk, we're going to find some commonalities between things we were seeing in the multifamily market and what he was seeing in industrial. So a lot of parallels. Overall, I'm going to switch up the order just a little bit. Start out talking about Portland. Then the rental market, step back, talk about the region, get into Saco and Biddeford a little bit, some of the activity down there, Lewiston, Auburn, and end with my forecast. So, in Portland, in multifamilies, there are two submarkets within multifamilies. There's the residential, which are the 2 to 4 units, and there are the commercials, which are 5 and up. These two interact, but they're a little bit distinct. And what was different this year is we felt them start to split a little bit. And the 2 to 4s felt like they were slowing down. The prices were not still going up. And when we got to the end of the year and I ran the data, that really seemed to bear out. The prices really flattened. 2 units were up 4%, but 3 units were down 6%, 4 units were down 6%. This market has really felt like it's stabilized. It's certainly not bad. You look at these bar charts, these are still very high prices, but they weren't continuing to go up. On the flip side, on the commercial, there weren't as many transactions. We're going to see that slide in a minute. That was, excuse me, another thing that was in line with what Justin had said. There were just fewer deals. And with a high demand and low supply, we felt the prices really start to get pushed up. 1031s were also driving a lot of the buyers and driving this market. Diverse investor profile, so investors were kind of coming from all over into this market, and that drove cap rates down. And you can see the numbers here. What's striking is you look at the price per square foot. Back in 2015, $79,000 per unit for a commercial multi-unit, and up to 2019 last year, $144,000. It's almost a doubling in price. That's pretty shocking. That's hard to keep up with. Now, the cap rates hadn't really changed a lot. I think they came down some this year for reasons we're going to talk a little more about, but a lot of pressure in this market. You can see it in the number of sales also. In the residential, it was really the same number of sales. This is MLS data here, where we had 119 2 years ago and then 116 this past year for the 2 to 4s. But in the commercial, where we'd had 23, we were down to only 10. Just not as much volume. So the buyers were still out there. There just wasn't as much to buy. And we had this situation happen at the end of the summer where we wound up with 3 of these listings right in a row. One, a 6-unit in Westbrook, a 5-unit in Portland, and then another 6-unit in Portland. And in every situation, we basically knew where the market was, and we sort of did our analysis and came up with the cap rates, looked at the property, and priced it. And then we said, well, it feels like the market's hot. Let's price it higher. And then we put it on the market, and we had multiple offers even over that. And this is the kind of thing that was happening a few years ago with the smaller units, and suddenly it was happening with the commercial properties. In fact, all 3 of those properties did not appraise, because we were really just outrunning the market all of a sudden. And yet all 3, 2 have closed and 1's about to close. All buyers just came up with extra capital. They want to be in the market. They want to own properties in Portland. They're in for the long term. There's nothing to buy, and they want to get in the game. So that was really what that was feeling like. A few notable sales in Portland are fun to see and to share. Here's a 2-unit up on the East End, a Munjoy Hill, that sold for $1.295 million for a 2-unit. That was purchased, I think, really to be used as a single-family home. This is a gorgeous, fully renovated unit. Now, here's another 2-unit. This kind of defies what I was saying about the slowing market for the 2 to 4s. If it was really a gem property in the right location, still very high demand, we could have sold this one 5 times over. And this is, again, a situation we thought maybe it was worth about $500. We priced it at $5 1/4 and sold it for $550 to some owners moving here from New York City. Here's that 5-unit I had mentioned. That was the second one in our series of 3. 5-unit, there's no parking there. The rental income was good. It was a nice property, but we were still surprised to see listed for $900, sold for $960 for 5 units. And this one is notable. This 2-unit in the USM area, very attractive, nice 2-unit. And what's notable here is it's sold to an investor. And this is another theme I'm picking up on from Justin, which is in some cases the investors were outbidding the owner occupants. And this kind of market, a nice 2-unit, a nice neighborhood, really should be, the highest value should be to somebody who's going to live there. That's what these things are made for. And yet in some cases it was actually investors paying top dollar. That was surprising. A couple other notable sales. These are the big boys. Bayside Village traded this year for $20.85 million. There's going to be another $11 million in redevelopment budget going into that. This is purchased by a local owner, Tom Watson, Port Properties. The deal was put together by Joe Porta. What they're doing is taking these sort of student quad housing, which has been a little funky and not really working well for a lot of years, and turn that into 196 market rate units. Now, this is not going for luxury. This is just market rate units are going to be going in here. I'm going to talk a little more about that, too. In outer Portland, out on Harvard Street, 85 units sold for $10.775 million. That was Vince Ciampi and Joe Porta, institutional investor there. So some good transactions, but just not the volume we've seen in past years. So the rental market, which really underpins the sales, here's my chart from the last few years. The numbers are going up a little bit. And yet, I'm going to kind of contradict myself a little bit and say we're really struggling trying to understand what the rents are, because I interviewed some of the largest property managers and owners in the area, and everyone felt that the market was basically flat. And so the numbers seem to be going up, and yet the sentiment is that it's flat. In fact, HUD does an assessment of their fair market rents for Section 8 and the housing authorities, and their assessment actually had the rents going down. Now, that is being appealed by the local agencies, so Section 8 rents are not going down this year. But the point is the data is not totally clear. There's even a seasonal component to rents, and talking to one landlord, they said, well, we feel like the rents are flat, but I think we can project a little bit of an increase, but we've got to get it in the summer. So there's some nuances in the market. And my thesis about what's going on here is that what used to be considered average in the Portland area has shifted. So the average unit in Portland was pretty substandard for a lot of years. These were the old jalopies. These were drop ceilings and paneling and clawfoot tubs. And the average has shifted. Many of these buildings have been gone through and updated, cleaned up, and that's what the market is demanding. So I think that's part of the reason it feels like the rents are going up, is because that we're not really talking about the same unit. And the question has been, for the last few years as this has been happening, is will the demand sustain? Will we be able to keep getting these higher rents as these units are improved? And at the moment, it seems like they are certainly holding. Every new project, and we're hearing about all these new projects outside of Portland, are certainly all filling up. The opportunity in the Portland market is that there's still some opportunity to update these older buildings into sort of the newer market units, as I'm calling them, and that Bayside Village purchase is an example of that. Some older housing that's not working quite right, find a way to bring it up to speed. Even outside Portland, in Greater Portland, all the new construction going up in Westbrook and South Portland and Scarborough, a lot of the Risborough projects and others, these are not discount projects. Here's the rental rates outside of Portland. And I think what we're hearing is tenants want to pay for a nice product. So one bedroom outside of Portland in these new projects can go from $1,250 to $1,395. That's higher than the average in downtown Portland. Now, there are more amenities, there are bigger units, there's parking, there's laundry. There's a lot of reason to consider that as a different product. And the two bedrooms, $1,550 to $1,625. So I think the needs of the rental market have really changed, and we were hearing about that at a couple other points too, and we're going to see it also down in Saco and Biddeford. Let's see, I think I had one thing. Did I skip? I wanted to briefly touch on short-term rentals because they are an element of this market. In the city of Portland, they've capped the number of short-term rentals available at 400. And this past year, we hit that cap. So all the short-term rentals in Portland are sort of spoken for. And after that, there's a waiting list. A couple points, really just for your edification to know, is that when you register, the registration is between the owner and the unit. And that registration can't move. So if you've registered a unit on the first floor, you can't change your mind and next year move it to the second floor. This is Portland's rules. Likewise, if you sell the building, you lose that registration. So the value of that short-term rental, that Airbnb in your building, is not going to really enhance the value of the building because that registration is going to go away when you sell the building. That new owner, if they want to do the same thing, is going to have to get at the end of the line. South Portland also has a regulation. I'm not going into that at this point. I don't know that anyone else does, but that's certainly something to keep an eye on. It's the dynamic of these markets. I'd had a lot of bullets. I felt like we needed a couple pictures. Here's an example of an old kitchen, and this is what it looks like after it gets the new buyer gets a hold of it and redoes it. This is a little more than market improvement. This is a little bit nicer. It also illustrates what a lot of digital technology can do to your windows and trees and water views, because I don't think they actually cut down all the trees. Welcome to real estate in 2020, folks. Justin talked about the 1031 engine, and their 1031s are always an element of the investor market, but it did feel like it was even more of an element this year. So I want to talk just a little bit about some of the things we were seeing. For those not too familiar with the 1031 engine, my kids helped me put together a fun little slideshow here. So what happens is you sell the building, you're going to get a bunch of money, but then you've got to pay the taxes. And some people don't want to do that. They want to defer those taxes, so they're going to kick the can down the road, defer the taxes, and they're going to buy another building. That's what a 1031 is, in short. And we are seeing that happen a lot this year. Want to give you some examples, but I'm going to first speculate on why we are seeing that so much. The market has been going up for so long that a lot of folks have a lot of gains. If you bought a 3-unit 5 or 6 years ago, it's probably worth 25% more, 50% more than it was when you bought it. And so some folks want to realize those gains, but they don't want to get out of the market, or they just don't want to pay all the capital gains. So there's both sort of this like profit taking, but then figuring out how to stay in the game. And I want to show you some of the examples we saw this past year. We had one situation where someone sold a 3-unit, they were divorced and needed to sell the 3-unit, but they still wanted to own property, so they just bought another 3-unit. It was really a lateral move. We had another 3-unit who sold. A young guy had a lot of equity, and he wanted to expand his portfolio, so he went from the 3 to the 6. We're talking to a gentleman right now. He's selling his 3-unit down in Brooklyn. He's going to come out of that 3-unit with about $1.5 million. That's what they go for down there. And with that money, he's going to bring it into Portland and probably buy a 10 to 20 unit. And finally, that 5-unit that I talked about on that previous slide that sold for $960,000, so that was in Portland, a 5-unit. He took that and bought a 5-unit down in Biddeford for about $425,000. So took less than half the money, replaced it with a 5-unit, took another 100, bought some land up near a ski condo, and put the rest in the bank to go on vacation and enjoy what he wanted. So there's a lot of ways that these markets are interacting, and that the sustained strong market is keeps things cycling and the price pressure here for us. This is the slide I usually start with, and this is sort of stepping back to look at the regional perspective. And that dip is Portland. And it's not pricing, this is just volume. And I think the volume is down probably because we didn't have as many of the commercial multi-transactions. But if we look at the other cities, they're all still growing and still healthy. Portland is still healthy, there just were not as many transactions. Another view is the prices across these different towns. And again, the data bore out what we were feeling, which is that Greater Portland, Portland, South Portland, and Westbrook, the pricing really had basically flattened. But Saco and Biddeford was going up, some because of buyers down there, some because buyers were going from Portland and suddenly happy to go and invest down in Saco and Biddeford, and likewise in Lewiston, Auburn. Here's a chart just so you can sort of see the relative median prices in the different metros. Depending on what your budget, you can decide where you want to go based on this chart. So briefly on Saco and Biddeford, there's just so much going on down there. It's really transformative. It was great hearing Will Armitage talk about all the development. 800 new units coming online in the next year. It's really becoming a cultural and business hub. From my research, it looks like there are at least 400 new apartments that have been created within the mills. And the Press Herald did a story recently about how young everyone is down in Saco and Biddeford. And it seemed anecdotal and maybe true. And I got the demographics from one of the mill owners. And in fact, their demographics had over 50% of their tenants as being in their 20s. So this really is attracting these folks. So these mills have a lot of amenities. They've got parking and allow pets and monitored facilities. But it's also just where people want to be. And in fact, it's not just a flight to affordability, because you look at these rental rates, they're higher than Portland in the mills. This tenant they had interviewed, 27-year-old, said living here now is a want more than a need. It has that small town vibe Portland had 10 years ago. So this is some of the transformation we're seeing. they're going down, and they could live in Portland, and they're choosing to go and have a one-bedroom in the Mill for $1,400 or a two-bedroom for $1,800. This is not discount. This is not just affordability. This is just a new place that people want to be. So some of the stats there, the transactions were up slightly. The sales volume was up quite a bit. Median sales price was up 9%, as we saw. I think the cap rate's coming down a little bit because there's going to be more competition, more buyers aggressively jumping into that market. And likewise, unit pricing really jumped from 63 a unit down there to 79 a unit. Lewiston Auburn, I think, is also benefiting from just this urbanization, some of its pressure from Portland, but a lot of just growth in their own right and this continued strong economy. Sales volume is up 17%. The overall median price is up 14%. And yet the price per unit is basically stagnant. I'm not sure exactly why that is. But I found this article about the amount of new market rate and affordable housing going into the Lewiston and Auburn area. Over 650 units are in the works to go in up there. And I think maybe some similar dynamics that we're hearing in these other markets where there's some local downsizing, there is some pressure from Southern Maine prices, but there's also just a desire for newer units, updated units and newer amenities. The buildings in these towns are 100 years old. It costs a lot to get them into a state where they become attractive units again. And in some cases, just the new inventory is the best way to do it. This slide just compares the relative rents between the cities, and these are not my own data. I can't do that level of rental analysis in these different markets. This is Maine State Housing Schedule, so this is related to that HUD valuation of rent. So this is what Section 8 would pay in the different towns, but it still gives a good relative view of how they compare. So the big question is, doth Portland's cup runneth over? Is that really what's going on? Or is there another dynamic supporting the growth in Saco and Biddeford, Westbrook, Lewiston, Auburn? And I think my answer is both yes and no. We're seeing the increase in prices and rents are pushing people out of Portland and finding development opportunities. If somebody's selling their 5-unit in Portland, they still want to own property, and they can replace it down in Saco and Biddeford. And as that area becomes more attractive, maybe they would have been reluctant to go to some of these markets in the past, and today they're not. So that dynamic is definitely happening. But at the same time, I think the sustained strong economy and this general urbanization trend that is a national trend is really supporting these metros and really exciting that people just want to be in cities. 20-somethings want to be there. They want it walkable. They want to have a community. And so that's kind of happening in its own right, too. So quickly go through last year's forecast, just for a little context. I thought that the market and political volatility would impact buyer confidence. I said, with all these tariffs and impeachment, surely there would be some slowdown in our market. I did not. I don't think that happened. The market's just fine. In Portland, I thought sales would generally flatten. I think that was partly true with the smaller units, although we were very surprised by the commercial multis. I think the industry was struggling to decipher value. I think I kind of got that. I think in some ways it's leveling off and feels more stable, but where those appraisals were not keeping up with some of these buyers, there's some value tension there. I'm trying to figure out what is the value in the market. The prime locations, the high quality units in the 5+ I thought would hold their value, and the smaller units and the more challenged properties would start to drop. I do think that was happening this past year, and the rental rates will remain flat. I'm giving myself a B because I think kind of the jury's out on the rental market. It's kind of flat, and yet there's this little bit higher end market still emerging. Outside of Portland, Saco and Biddeford would still continue to see prices increase and increased activity, absolutely. That was pretty easy, and Lewiston Auburn also will continue to see prices rise as investors seek out affordable alternatives. I think that was a pretty easy one to call too. So this next year, I've simplified things. I like to joke. People often ask me what my prediction is, on the street all the time because I do this forecast. And I joke that, I was telling people not to buy properties 3 years ago because the market had been so hot for so long. And basically, for people who don't listen to me, they've made a lot of money. So take any advice I say with a grain of salt. I think Portland is going to stay steady and strong. Those commercial multi-price are going to level off, but Portland is not going anywhere. There is so much development. Now jobs are coming downtown. And frankly, there just is not a lot of construction happening in Portland. I would love to have a whole separate talk on that and development, the need for housing in Portland and the challenges. But most of the housing is actually being developed outside of the city right now. Saco and Biddeford will continue to see strong growth. There's affordability gap. I think it's going to create an opportunity for folks who want to find buildings that are tired, can take some improvement, and all the energy and new young folks find that market. It's going to keep happening. And Lewiston Auburn, I think, has all the reasons to believe it's going to stay active. I'm curious about all this new inventory there and if that winds up rivaling some of the existing stock, and so that some of that existing stock does not get improved because there's other new inventory being created. But that's really the same dynamic down in Saco Biddeford. There's new units going into the mills, and the question is always, is the rising tide going to lift all the ships, or is one going to start to compete with the other? And we'll just have to wait and see. As we're finishing up the year, I can tell you even just the last few weeks since we've come out of the new year, I'm talking to brokers every day who seem to have buyers, and there's nothing on the market. So while the market does feel like it's leveled out, pricing feels like it's leveled out, there's still a lot of buyer pressure and low inventory. So I think prices are probably going to stay pretty strong this year. Thank you very much.